What's going on with Palantir stock? The stock is down 14% after posting earnings last night. Is it a buy here, or is the stock going to see more pressure? Let's take a look at the earnings highlights. I'll also look at a chart. I'll let you know where I think the stock might go. So Palantir is down about 14%, 21.74 a share right now. The low this morning was 21.35. You can see the 52-week high, 27.50, 52-week low, 7.59. This is a $46.24 billion market cap. So this is the headline last night after earnings. Shares are down 7% on lower than expected guidance. Of course, now down 14%. A couple things to note right off the bat. This was the sixth straight quarter for net profit. And so it is possible that you could see Palantir in the S&P 500 at some point. Palantir also signed a $178 million contract with the U.S. Army. Now, what exactly was that $178 million contract with the Army for? This is for a project known as Titan. It stands for Tactical Intelligence Targeting Access Node. Now, this is a ground station used to connect Army units to high altitude and even space sensors, which in turn provides targeting data to the soldiers so they can essentially take out their enemies. The goal here is to make it easier for soldiers to identify, aim, and fire upon a target by fusing sensor data from various live sources. Palantir's big selling point here was the use of AI to make that whole system run as smoothly as possible. A quote here: Titan greatly increases capability, but we want the software and AI to decrease complexity. We designed the system to be modular. The key component is the software. So the contract is a 24-month period of performance. It covers 5 of each of both the advanced and basic systems. Those advanced systems are the ones that connect to space assets. So this is something new for Palantir, and it's really displaying their ability to take their software technology and to apply it for a different way to monetize. Now, $178 million is a decent number. The question is, how much can they really scale this? How many customers really are out there that can buy this technology? For me, where it's still going to be at is the commercial revenue, being able to scale it to thousands and thousands of businesses. But of course, government is still a big piece of Palantir, and stuff like this is really exciting, and it's what gets retail investors all hyped up over the stock. And this really is a cult stock, and this is one of the reasons why. Okay, so non-GAAP EPS 8 cents, that is in line. Revenue $634.33 million. That is up 20.8% year over year and beat by $16.72 million. Now, 21% year over year revenue growth is a solid number, but of course, this stock does carry a premium valuation. We'll talk about that later. Customer count grew 42% year over year and 11% quarter over quarter. Full year 2024, they're saying they're raising their revenue guidance. You can see 2.677 to 2.689. Now, the consensus is 2.68. So you could say this lower number here is slightly lower than consensus, but overall solid there. Commercial revenue guidance growth rate of 45%, at least 45%. And solid number here, adjusted free cash flow between $800 million and $1 billion. And Palantir expects to have GAAP operating income and net income in each quarter of this year. Now, we've covered Palantir on the channel several times, and we've talked about if you're investing in Palantir, it's really about the commercial growth. Palantir was founded in May of 2003, so this company is over 20 years old. So it has a very established government business, and that is still healthy and has some growth. But if you're going to see exponential growth, where we really want to see growth is in that commercial segment. And CEO Alex Karp anticipates that our U.S. commercial business, which accounted for 24% of our revenue last quarter, will remain one of the most significant drivers of our growth in the near term, which is good news. Warfare in this century will continue to be transformed by software, Karp added. The platforms in use by our defense and intelligence partners present a very real threat to the survival of our enemies. This is big here. For comparison, we now earn more profit in a single quarter than the amount of revenue we generated in an entire year a little more than a decade ago. So the company has improved, especially on profitability metrics. Some of that had to do with stock-based compensation and improving in that area. Now, what's interesting about that, you can see in 2023 here, stock-based compensation. This is $114.7 million, and now it's increased in 2024 up to $125.6 million. So this is going the other direction, but still showing profitability metrics. And it's important to note, again, 6th consecutive quarter of GAAP profitability and GAAP EPS. This is GAAP, not non-GAAP. So at some point, I do think that Palantir will get into the S&P 500 if it continues this path, and the stock will go higher from that news, just like Tesla did. Now, you know what happened to Tesla after that, and that's a whole different story that we could spend a lot of time on. Now, this is important to note if you're an investor in Palantir, if you're considering buying the stock. So Palantir does what they call boot camps. This is with prospects, so customers they want to sell to. It allows them to get hands-on experience with Palantir's AI tools and technology. Karp said the company conducted more than 660 boot camps during the first quarter. They need results now, Karp said, and we believe that we have the only platform that works. This is a shareholder letter from Karp to shareholders, and it does give you a good idea net income by quarter. This goes back to Q1 2023. You can see that's ramped up nicely. Also, commercial revenue, again, we want to see that continue to ramp up, and it is going higher, which is what we want to see. Our intention is to make our artificial intelligence platform, AIP, the most dominant infrastructure in the market, empower the effective deployment of artificial intelligence and large language models across institutions. So this is what we've been talking about. When you think of generative AI and those beneficiaries, you want to focus on companies that are focused on enterprise. So selling B2B that can scale to large businesses. Palantir was one of the stocks that we included in 2023 on our top 10 AI stocks to buy for the next decade. And I believe that we haven't even really seen the beginning of the AI revenue yet. Now, with that said, it doesn't mean the stock is necessarily cheap, and we will talk about valuation, and we will look at a chart later as well. This is a great snapshot to give you the highlights from this quarter. So we talked about commercial revenue growing 40% year over year. That's solid. Now, this is just US commercial revenue, 27% year over year, and then total revenue grew by 21%, but that's only 4% quarter over quarter. Closed 87 deals over $1 million a piece, and the customer count for commercial in the US, it grew by 69%. That's exactly what we want to see. Now, it does take time for Palantir to scale these customers. So it's the 5th consecutive quarter of GAAP operating profitability with 13% margin, and the 6th consecutive quarter of GAAP profitability, 17% margin. Adjusted free cash flow of $149 million, 23% margin. Of course, this is what you want to see in this type of environment. If you're investing in growth stocks, the stocks that have free cash flow are going to perform better than something, of course, that's burning cash in a high interest rate environment. And GAAP EPS of 4 cents, adjusted EPS of 8 cents. I do think it's important to note this partnership with Oracle because I do think it could be big for Palantir. Oracle is much larger than Palantir, and if Oracle can essentially help sell some of these deals for Palantir, it could boost revenues down the road. So we talked earlier about those boot camps. So since launching AIP in the middle of 2023, boot camps, so 915 organizations in the United States around the world. That's significant. And then a great snapshot here just to see the numbers on one screen. You can certainly pause it if you need to. I think one thing to point out here is US commercial total contract value. That's up 131% year over year. And this is significant because just back in Q3 of 2022, we had a GAAP net income loss of $123.9 million, now positive $105.5 million. And that operating loss, negative $62.2 million to a positive $80.9 million. Rule of 40, according to Palantir, this is the highest it's been since Q2 of 2022, now at 57%. And just to have an idea of the government revenue, because again, commercial is where it's going to be at, but we do have 16% growth, which is still decent. US government growth, only 12%. So seeing more growth in the international space. Now, 21% total revenue growth isn't a bad number, but of course, it's not a cheap stock either. So 87 deals. This is just from Q1 2024. So one quarter, 87 deals of $1 million, 27 of which were at least $5 million. And 15 were at least $10 million. And Palantir still does have $3.9 billion of cash and cash equivalents. According to Wedbush, Palantir's sell-off is a golden buying opportunity. Is it? Let's dig a little bit deeper. A quote here from Dan Ives with Wedbush Securities. We are laser focused on the AI story playing out with artificial intelligence platform AIP leading the way, and Palantir delivered robust numbers on this front yet again. We believe any modest sell-off post post print is a golden buying opportunity for this pure play AI name, and Ives has an outperform rating and a $35 price target on Palantir. Now, I'm going to say this next part just to add some credibility to what I'm saying. It's not to diss anybody else, and I'm doing my best here not to sound too abrasive or cocky or anything like that. But there are a lot of YouTubers that cover Palantir and talk about the valuation, say it's going to the moon, $1 trillion valuation, and so on. Now, I worked in software for a decade, and I sold cloud SaaS software as a service. So I do have a good understanding of these businesses and how to put a value on them. Now, before earnings, you can see Palantir was 17.5x. This is EV/NTM revenue. That's the second most expensive cloud SaaS name behind CrowdStrike at 17.8x. Now, what's even more interesting about this is data as of May 3rd, 2024. Now, if you look at a 5-day chart, now this goes all the way back to May 1st, and it was $21.93. Basically the same it's trading right now. So it's showing 1%, negative 1% over the past 5 days. And that chart I just showed you with the valuation, it was May 3rd. So it was actually more expensive, around $22.85 a share, something like that. So the valuation has come down a little bit, but it's deceiving because if you look at a 5-day chart, the stock is essentially flat. And of course, that's because the stock ran hard right before the earnings report and essentially gave it back. So what is Palantir really worth? And this is a tough question, because you saw that Rule of 40, 56, it's profitable. There are not a ton of companies in this space when you think of cloud and SaaS names that are actually profitable. A lot of them are still burning cash. They're still in a different phase of growth. Now, at the same time, you can make the argument, well, Palantir's been around for 21 years, so you should be able to show a profit after 2 decades, right? A lot of these other companies are much younger than, say, a Palantir. Should Palantir be the second or the third most expensive name? Well, that's up for debate, of course. Drop a comment below and let me know what you think. Now, of course, I understand, guys, that retail, we get excited about names like Palantir. It's an exciting company, right? And I'm excited about Palantir's future too, and I am bullish. I try to remain neutral and give you information so you can make decisions on your own and be a better investor. So if information like this is valuable to you, make sure you subscribe to the channel and click that bell for notifications. I would definitely rank Palantir in my top 10 when I think of cloud SaaS. I don't know if I'd personally put it in the second or even the third spot, but I do like the company. So let's look at a chart and I'll show you that, and I'll talk more about where I think I would buy it as we go through. Before I do that, I want to look at some unique KPIs. This is on mega charts. This is total customer count. This goes back to 2022. So 367 total customers. You can see that grew nicely to 497 in 2023. Deals over 5 million. Well, you can see it grew a lot. From 2022, only 11 deals. 2023, 37 deals. And we just had 27 $5 million deals just in this last quarter. If you haven't checked this out yet, guys, this is called Mega Charts. Now, I have a link that's pinned in the comments. Go check that out and use coupon code FIREDUPWEALTH. It's only $9 a month to give this a try. I think it gives you a great edge as a retail investor, gives you some great visuals to see how a company's doing. So looking at the chart, anything you see in orange is a previous chart day. Yellow is today's chart day. You're not going to see any yellow. I'm just going to talk through it. So recently we talked about Palantir. This is the most recent up top. 22.70 support. Watch for $30 or even $35. But on downside risk, 16 to 18 possible. This was a Fired Up Wealth Discord buy between $6 and $9. I said it was overvalued at $25 in my opinion, and earnings will decide. Now you just saw Dan Ives says it's a $35 stock. I think there's a chance it probably goes to 30 and above this year, especially if the market stays bullish. But if you've been investing for a little while, you know that stock action doesn't always have to make sense when you look at things like valuation. Now, looking at a chart, this is really the last 1% of the puzzle, in my opinion, and it gives me a better idea as a long-term investor for entry and exit points. I typically like to buy and hold for 5 years. And this red line is where we're at. So it bottomed out just above this 100-day moving average. So this red line here is the 100-day moving average. You can see this purple line that's kind of hidden right here on this trend line, this blue line. This is the 200-day simple moving average. Now that's closer to $19. And then this Fibonacci S3 support 3, this is $18.36. So is the stock a buy at $21.70? Well, of course, it's going to depend on your time horizon, what you're trying to accomplish, the blueprint that you've designed for yourself, your risk tolerance, and so on. I like Palantir. I'm bullish. I think if you buy it, you hold it for 5 years, you're probably going to be pretty happy, even at the price it is right now. If you want my 2 cents though, I think the stock is something that I wouldn't personally add to unless it got below $20 a share, probably even below 18. I'm not saying that's going to happen necessarily, but I'm just looking purely at valuation, what I think the company's worth. From a technical level, it could certainly hold up on this 100-day moving average around $20, $21. And this is a retail momentum name. So if retail continues to stay behind it, if the market stays bullish, it could easily bottom out. You could see it above $30 a share. If you really want to own a company like this, the best thing to probably do is dollar cost average DCA. If this video is helpful, make sure you subscribe, drop me a like, drop me a comment. Have a great rest of your day. Take care.